to summarize the premise of the book, it's this. You can have all of the financial knowledge in the world. You can know all the formulas, all the data. You can be a financial expert. But if you don't have the behavior side of finance down, you're going to do very poorly. And on the other hand, you can be a complete novice about finance, not really know the details, the formulas. But if you have your behavior down, if you have a good relationship with greed and fear, if you can take a long-term mindset, if you are not very gullible and you seek your information from good, trustworthy sources, you can do very well over time. And very few other fields work like that. There aren't many fields where someone with no education, no background, no experience can massively outperform people who have the best education, the best background. That doesn't happen in many other fields. And so we tend to be taught finance like it is math, like 2 + 2 = 4, very clean, one answer for everyone, very precise. And investing is just not that. It's a much softer, mushier skill that has to do with how we think about, again, topics like greed and fear and whatnot. And people know this. Behavioral finance has been around for a while, but I think it's so easy to sweep it under the rug because it's not analytical. You can't summarize it with charts and formulas. So even if it's the most important part of investing, it tends to be one of the most overlooked parts of investing. So the book is 19 short stories that tell a story about how we think about risk and how we can think about the psychology of money and behavioral finance in a better way that's easier to wrap your head around. And I wrote it because I've been a full-time financial writer for almost 15 years now. And as I've noticed, and everyone else has noticed, it's just a constant show of crazy, silly, inane, dumb behaviors all over the world with everyone. There's no other field than money where people showcase how flawed they are as individuals in so many different aspects. So there's no shortage of material to write about how people think about money in crazy, interesting ways.
Can you share with us 2 examples that you think are most impressive? They can be recent, but they can also be doing crazy stuff.
There's one story that I tell in the book that in the United States, I don't know how this works in Europe, but in the United States, we have a big lottery system. You can go buy lottery tickets. And in the United States, the huge majority of those lottery tickets are purchased by the poorest Americans. The lowest quartile of income groups in the United States buy 90% of the lottery tickets. These are people for whom they are struggling to buy food and pay their rent, and they're spending a fortune on lottery tickets. Now that looks crazy. That looks like why are these people who can barely feed themselves are buying scratcher tickets? What are you doing? And there's actually a sense here that I think it can kind of make sense in the sense that, look, most people who are stuck in the lower income groups probably don't feel, as most of us on this call do, that we can move up in our careers, that if we work hard, we can get a promotion. If we make an investment, we can grow our wealth over time. If you feel like you are stuck in a low wage job, you don't have that feeling that most of us do. And therefore, if you feel like you're stuck in a minimum wage job, maybe you feel like buying a lottery ticket is your only chance out of that situation that you're in. It's the only time in your life that you can hold on to something tangible that says, this is my ticket, literally my ticket out of my economic consequences. So for me and you, and most people on this call, it looks crazy. These poor people buying lottery tickets, what are you doing? In their minds, I think if we can try to open our minds a little bit, it makes a little bit of sense. And that idea that what looks crazy to me actually makes sense to them, I think applies to so many things in money that we don't think about. And there's so many times when people look at the investments that people make, how they trade their stocks, whatever they do with their money, their savings rate, and we say, that's wrong. You're doing it wrong. That doesn't make any sense. That's irrational. But lots of times it's just because we're different people with different incomes. We live in different countries. We're born in different generations. And therefore we think about money and goals and opportunity in totally different ways, which gets back to this idea that money is not like math, where 2 + 2 = 4 for me and you and everyone. It's a much more personal, psychological and emotional field than we give it credit for.